Note to self: turn microphone on. Good evening, guys. Tortoise Capital Nightly Strategy Review for Sunday night, July 31st, 2022. Got some housekeeping to keep up with here. There's a really good extract from this morning's Creativity 202 course on deep listening. It really puts true storytelling into perspective and the power of mastermind groups when intentions are shared. I had a couple people interested in starting the Creativity 202 course and wondered if it was better to start a new session with a new cohort or to just join the one that's in progress. I'm still thinking my way through that. There's an advantage to having everybody on the same lesson in the group, but at the same time, having fresh stories is a good thing too. I'm leaning towards starting a parallel session and taking it that way. So I'll make a decision on that by tomorrow and let you know. But the short answer is, yeah, there's going to be time here to join another session. Let's see. Wanted to make some comments on Arch's Aussie dollar here. So these are all fine in here. You know, there's kind of a grind, and he's not losing much, not winning much. But the ones that are troublesome to me are these. This one is the re-entry that we have to have, and then if you were going to go short, you need to be short here, not here, which makes that one pay. And then this one gets long here and not here. And now if you're using the risk box, just trust the PSAR. And you get one trade. Now, you might decide to command override and capture that one, and we will not be offended if you get that trade or if you get this trade. But really, the PSAR, notice the PSAR flips. Even if you put a trailing stop on this one, because you have to be away from desk, this one was late to enter, but it still paid off really well. And that's the second position. This one should be here and gets paid. This one should be short here, not here. This one should not be long because it didn't breach the PSAR. So you're very close. Trust the PSAR. The PSAR, you should trust it. Here were some stats from Constantine. He trades only a few. Let me. I'll just read your notes. I'll read his notes. These are 2 weeks of trading stats. Sniper only. He only trades a few assets: gold, crude, NDX, and DAX, mainly at previous day high, low, previous week high and low, season high and low. So the compound critical states. Markets were in his favor, to be honest, and he's using the standard journal, but also our journal. So here's his stats for the sniper. Average R2, aiming for 3, taking 2, pretty good expectancy. 3-1 payoff average win to loser, 8% real return on equity over a 2-week period. That equates, of course, it equates to 160% a year. Small drawdown, good profit factor, and Sharpe ratio, and legit SQN. Only one losing day. the sniper. He had, let me find a typical trade here. Here's two. Here's the 5-minute on the crude. He saw a last week high, topping action, PSAR flip, PSAR flip break for 3.7. This is where I'm going to coach him to look at that. That's that little RL10 wiggle where it doesn't even rebound highly. It just continues to break, and now you get like a collapsing dragon, so there's even more there. But this is not to say that, that's not chopped liver either. There's a couple legs up out of the sideways quiet channel that should not be ignored. So that could have been a 10-hour day fairly easily. And I was looking at oil for high. This is his high and low setups. Oh yeah, this is the same. This is the 5-minute U.S. oil cash market, and you can see the end of that sideways quiet channel. PSAR flips, caught at 2, PSAR flip, caught at 2, PSAR flip exit, SSC setting up. Now this is interesting. If this holds here, if it takes out this price level, that could be a nice support, just like this was nice support, and then a move up to here would not be out of order. So nice work, applying, our principles to the symbols that he's already trading. Pretty nice work. Let's see. All right. And let me clear these out. Doggone it. How many of these did I open? Okay. All right. Let's go to the RL30 slope stats, courtesy of Chi Wing Chong. Thank you, sir. So we're seeing the S&P has now moved out past Z1. There's Z0. So the recovery is in shape here on added strength, and the growth is leaving behind the staples, which are starting to stall as money rotates into XLY type signals and targets. So healthy, normal behavior from the defensive sectors. So that's typical. And then inside the other sectors, it is tech and finance leading the way, followed by materials and energy, which had taken such a hit, has had a nice improvement, but is later in the, I guess I should say earlier in the business cycle. So this is where we would expect to continue to see the engine of growth to new 30-day highs. So we need to be ready for that. Let's go to Ken H's series. I should also say there was interest this weekend that came out of the True Story circles that talked about the possibility of starting up like maybe a Sunday afternoon True Story circle just for swing trades, in which we would normally cover these on a Saturday. So reports on a Friday, Ken H's setups on Saturday with some discussion, and then Sunday like around 5 p.m. CST or early evening, maybe even this Sunday night session, becoming focused on swing trading, True Story. So not me talking so much, as you guys doing a true story circle and sharing your setups and your lessons learned and more active review of your homework, if we can say it that way, in a true story circle. And I'm in favor of that. We're going to start that next week. The only people in that room will be those who have who are participating in a workshop or a Patreon subscriber already, so that the people you're working with have been vetted in that sense. So we start with safety, trust, and truth right from the get-go. So I'll publish something on that this week. All right, so here's a ETH. Very nice trade here on the 65-minute. We see Ken's weekly, daily 65-minute chart. The big gap, the consolidation with a COTA 2 in here. The nice run up, pullback, and then I treat that as an SSC after this harsh sell-off. But in reality, it's a COTA 2, so it has a compound goodness. I would be taking my exit right up in here and not holding that over the weekend, but I like the tight risk box that he's got here. If there's a continuation or a collapse, it's going to be large in either direction. The COTA 2 recovery is just starting on the daily chart, and you can see on the weekly that we're setting up this kind of shape. The last time it did that was here and here and in here, and in all three cases there was a reasonable follow through, and then this one is showing us that maybe 25 is the next. I'd say 20 is the next logical target, and 25 is the secondary target. And starting from 12, that's a 65% gain to the upside. So that's not to be sneezed at. It does have to get through here, but once it gets through I'm going to say about 14, that's going to get everybody's attention, and off it goes, because that will be a doubling from 7 to 14. That will give it a new wave of enthusiasm that could take it to 20. So I like Ethereum right here. Devon Energy. He's just showing you how to do it here. Here's rising lows, COTA 2, in the money. Every reason to believe that this can close that gap and get to 69. And he's got a nice little buffer in here. His stop at about 61 locks in the gains from his primary or his initial position. A sell-off to 55 is not out of the ordinary. So this is a nice critical state on a daily, ready to go in either direction. Like it. This feels like a strong support level around 50 and 55, so this could really go. I mean, it'll be based on the strength and energy, of course, but that's one that's going to be exploitable. U.S. Steel, just superb. Oh, so good. SSC on a daily, COTA 2 on a daily, and you see how that shapes out on the 65-minute, where he gets this, once it's cleared, resistance. 1, 2, there was a second entry possible here. There's the breakout. This is not resistance until it gets to 25.5. This is significant resistance. So there's still a tactical trade in here to about 25.5, but if it gets above, I'm going to say about 26. Yeah, if it gets above 26 on every measured time frame, that's going to look like a runaway locomotive second leg. There's your first leg. That'll look like a runaway locomotive to 30 is the upside. Secondary target looks good. The short side on that one is, I think if it falls below 23, then you're kind of into this free fall, and the real support is around 20. I don't know how much that would hold at 21.5, but that's one leg, two leg. So if you have a tight stop here, you could almost play 3 legs short on the intraday. But to me, the upside looks pretty, is going to get people's attention. Walmart leading the way out of the double bottom, COTA 2. Here's another COTA 2 getting ready. Now here's where he pounded that one at 124.5. He's got a really nice position in from here. Now, this is strong support and resistance. You can see how that hesitated here. But it broke out. If you're just starting the position, that's a good risk box to go in either direction. It has to get through 133. Has to get through 133 to really to be the next leg up. But if it does, remember this is all that was all free fall. There's no resistance in there. You could say that there might be some selling pressure around 138. So everybody who was buying it here is happy to get their money back. But if I'm that guy, and if this thing has crawled all the way out of here, I'm not getting out of that position because I think it's going to close that gap and go to 150. I think you're nuts if you get out of Walmart right now. And this is where I'd be adding at above 133. And then to lock in this gain on that nice swing, I think I'd be about... I could argue 129 if you want to give it a $4, you want to keep $4. If you want to be tighter on that, 132, 131 and a half. Depends how aggressive you want to be on it. Maybe half and half. That's a nice trade. I mean, that thing trades like a young man. It trades like a young growth stock. I mean, that's a 10% move from 120 to 132. Like if I took the symbol name off there, you wouldn't have bet that was Walmart. Verizon is coming from out of a deep value hole here, that Z3 excursion with a nice little rebound like it's always done. There's your 1, 2, 3 entry. On the daily, it hasn't even crossed the dragon yet till it gets above about 49. On the 65-minute, he plays the SSC. There was a COTA 2 available here if you didn't already take that one, but I'd be happy with just one position in here and that with that much of a gain locked in and ready to add a second position because, again, we have this little bit of resistance around 47.50, but it should get across this gap pretty quick, and then if it breaks through 48, there's no resistance whatsoever to 49.50, so it should cross that pretty fast. So you can imagine a world in which that recovery gets to here pretty fast, but I'd take it in 2 stages. If you're in it, keep it, and then wait to cash at 47 if it fails. But if it gets through there, add another position on the far side. And then wait for strong resistance around 50 when this will feel like it's back to normal. It'll feel like it's back to its normal, horrible self. So this is just the opportunity trade from the harsh sell-off, and you're capturing the anomalous pain. Nucor Steel, not unlike U.S. Steel, although it has not had the same runaway gains, but the COTA 2s in this thing have been nice. There was the latest one. The other nice thing, though, is it's broken above that and is testing its high up in here. So this is not resistance until you get to about 151. So there's still about $15 to the upside. And you could have as much as a $5 risk and still have a 3-to-1. The short side trade would be down to about 115 and then 110. So if we see weakness in the broad markets and the metals, which have all been on a tear, there's a possibility of a short side play there on Nucor. Amazon just people jumped on this may have been Bezos jumping on the opportunity to buy it on sale. There's your COTA 2. There's your SSC COTA 2 entry. Here's the emerging dragon. Now you're stuck. Now what should I do up in here? If you're already in it from any of those entries, you've got to have it locked in at 132, and then you could play that short as it returns to Earth. But here, this is sitting right in the middle of that gap. So this really is a compound critical state. If this breaks out to the upside, which is my expectation, then I don't see that as resistance. I think fair value is probably will be seen as 155. So you got about a plus $20 move. You put a $5 risk on it and just hold your nose. You got 4-1. That feels good. $5 risk this way gets you 3-1 on a return to 120. This thing, I mean, you got to own Amazon. It owns the world, for crying out loud. Said every hedge fund and mutual fund manager ever right now when they're seeing a chance to buy on sale. Oh yeah, we've already seen Devon. Sorry. Devon, Amazon, Nucor. Let me get over here to. Let's see. MCK, McKesson Corporation of Healthcare. Now this one's quite a bit different from the steels. You can see obviously the leg 1 and leg 2 of the healthcare. This weekly chop, this consolidation area, which was tradable on a daily and hourly basis, has had this sideways madness. Only recently have the last 3 days, 5 days, really broken out. So you have this, it's trying to leave this all behind. What was once resistance is now support, and you have a little kata 2 action here. And there's every reason to believe that could continue up with no resistance overhead as it breaks out from a all-time high. So that is a tentative, just buy it, hold your nose, and keep a about a $5 trailing stop on it and leave it alone. Easy one. There's better ones to short, I think. But if you had to short this, that's a good place to get short and expect it to get back to about 330. That's about a 3% move. But I think there's so much resistance. I'd be surprised to see a runaway running all the way through here without a lot of chop. But your downside is pretty controlled. $5 or $3 risk inside here. Yeah. That looks like that was actually like a fireworks continuation where you have, just for those of you following along with the sniper, you have this amazing run up and then it gets all quiet and choppy in here and you're wondering, is this going to fall back to earth or is it going to start a second leg up? That's what the start of a second leg up looks like. Just, it doesn't look like much, but if you look at where all the thick signal is inside here, that is a directional move right there. That's the continuation from a fireworks condition. On the other hand, this is what Godzilla begins to look like here. So you had that same kind of long-term choppiness, the beginning of that next leg up, which lasted 6 weeks, a return to grace, or return from grace, and hovered here. Then that broke, and when that broke, you get this massive downward move. 1, 2, 3, and hold. Now we're in a 2-day holding pattern down here. What used to be a comfortable at 140 is now at 97, and it's had 2 days to fail further, and it didn't. And the PSAR is coming down to make an SSC pretty soon. So this is an effort to even front run that a little bit. There's no way this is a swing trade, but this may very well be early days in what will become an SSC, followed by a series of tentative moves to get it back to its real fair value around 112. So you're looking at about a $15 upside if that scenario comes true. It's not a sexy stock, it's not a big stock, but it is an S&P 500 stock just beginning its Godzilla move. So I like it for that reason. Amazon already saw, sorry. We saw Arch with the Aussie. Yeah, well, it looks like I got all these. Okay, so that looks like all of them. I had accidentally double opened some of the charts. All right, more to follow on the Sunday True Story Circle for swing traders. I owe you a write up on that to start next week. And then also for starting a new Creativity 202 cycle. I think I'm open to that. We're about, that has like 6 big sections, and the initial group is through section 1. So it may be that the logical place to start is to let them finish section 1 and move them into section 2, and then start a whole new group with section 1 so you have a chance to work together. And then I think after you complete section 1, it's probable that you could join other True Story circles. Let me think my way through that. It's a good problem to have, but we'll get a new section started here, no matter what, within a week. It's having some really powerful impacts on my own thinking, as well as those of the guys inside there. I mean, Chun Long just was motivated from that to explore sniper trading going forward, with a 3-2 win rate and a 3-2 payoff rate on 770 trades, where he's still just learning the pattern. So this is looking very promising. All right, that's everything I got for you guys. We shall see you tomorrow. Oh, I'm sorry, Luke. Yeah, I do. Did I miss your frames? Maybe I. Oh, okay. Oh, I'm sorry. Didn't see them in the bottom there. Sorry, brother. All right. All right, here's the 5-minute Aussie on 24-hour, 8-hour, and 1 hour. Remember, he's trading on the 5-minute. So this one gives him 12 times elevation, so he can stand back and see the. And then this one is 8 times the hourly, and then this one is 3 times the 8-hour section. So again, these are the price levels that he's looked at on the hourly that will give his 5-minute system some information. Like if it breaks, like his 5-minute system is going to trade a lot inside here, but if it breaks out here, he should be looking for strong moves to the next one and looking to add positions certainly by the time it breaks out. And that would be these first, this section here are those 2 plus 3, and then you can see 2 and 3 on the dailies right here. So if it breaks out of this tight range above that second green line, then there's a lot of free room for this thing to run up into here, for a double big move. So he's trying to use these price levels to alert to higher time frames informing his trading. And the same thing's going to work to the downside. You can see really strong support there. And here underneath the dragon, this is kind of like an intermediate. These are the two that I would pay the most attention to. This one's nice because it's a RL10 breakdown, and you can see what happens after that. So if it breaks here, you could reasonably expect to see a strong move here. But if when this one held, it was a nice move up. But if that breaks, this thing is coming all the way down into here. So you want to be sensitive to those break points. You can see that even in an 8-hour session, how fast and how far that can move. So this is a really nice critical state to be in here on the daily. So I'm liking that. I'm liking that all the way through. Look. Here was the session from Sunday, or Saturday, I should say. Um, he saw the peak, the reversal, so he gets fake one and just covers, and there was no follow through. Tries this one, didn't work. This one is now starting to gain traction, scratch. He waits for the Kata 2 break this time, gets paid. His second session, there was a CD available here. He's working the 3-minute chart on the second one, a real stretch. And again, this opens up nicely for him here on a Kata 2 kind of collapsing dragon and gets paid for 1.3, so nice work. All fractals. Trust the PSARs. He's looking at his at the end of each day to look out the looks at the last 50 trades, works out the rolling R and histogram. So he's got the first thing we look at is tightly controlled left side, correct. Looking for an orderly progression from -1 to +2. So that looks like a normal process. Notice that what he's got here is that these losses that are stacked up under an undisciplined trader would be all of these larger R multiple losses that would stick way out in here, that would mirror this, pure normal district. So he's not allowing it to go bad and squishing that to the right, and that's adding to your bottom line. At the same time, he's allowed himself the possibility of seeing these fat right tails. So he's got all the three things that we want to see in his histogram, and trading by the numbers. That's what we want to see. And his win rate is 62 to 36. That's like about a 2-to-1. And his payoff is about 0.7 to -0.2. That's very good. That's about a 2-to-1 that pays 3-to-1. That's a pretty favorable combination right there. Got everything leaning in your way. So again, the three things we look for. Here's your zero line. First thing, nothing worse than -1. That's the first thing. Second thing, looking for positive expectancy and a normalish looking curve in here. That's the second thing. And then the possibility of fat right tails. 16 or 12% of them get beyond, so that's 1 out of 8. So the expectation is that 7 out of 8 are getting handled normally and are positive expectancy, and you're getting some icing on the cake when the higher time frames come through. When do the higher time frames come through in his trading? Well, that's why that little framing that he did was so important, where he had the 3 price levels below and the 2 immediate price levels above. The third one was way up in here. So when that thing is trading on his 5-minute charts in these spaces, my spider sense is that his trades on the 5-minute charts that are 7 out of 8 positive expectancy, that's this part of the histogram, those are all trades that are happening inside that 5-minute boundary that he's the 5-minute chart boundary that he's working. But periodically those things will break out to the downside and have a big runaway move, or will break out to the upside and then give a runaway move, maybe a Kata 2. And so you get these exceptional moves when it breaks out of that previous normal, and that's where you're open to these possibilities. You don't expect them on any particular trade. You expect him, he's legitimate in expecting them to happen maybe 1 out of 8 times. And if he's trading between 10 and 20 times a day, it would not be unusual to see that kind of a runaway move 2 to 3 times a day over the course of about an 8 or 12-hour period. So that's why it's important for him to add these breakouts to the upside and the downside so that he has some price trigger that lets him know that he's entered the world of potential breakouts. Check or hold? Okay, very good. And Ken H has sent some work on the Bollinger Band squeeze. Very rough right now. Yeah, I saw your note about referring to Chuck's work. Yeah, what I would my general approach to that, Ken H, looks like, since I got you on here, just to run through the concept real quick. This is an old trick right here to have a chalkboard. All right, so what we can do in the in the RLFF framework, regression line fractal framework, is we care about the relationship between the RL270, the long-term fair value, and the RL10 trader's price. The difference between those two tells us the difference between the aggressive young traders, his trader's price, and the RL270 long-term buy and hold fair value, what they think is fair value. So when we have a Z3 pinch set up, when the Bollinger Bands, the Z3s, have come together for an extended period of time, because price was wobbling and then it got real tight, and we have this measured tight box, everything is compressed. When price has been stuck in there for an abnormally long time, that's when you get the Z3 pinch or a super pinch, which is the one we really want. A Z3 pinch occurs when a noise box that is appropriate for the time frame says, look, I've got the Z3 lines all compressed into what is normally a noise box. That's a sign of abnormal compression. If I was using daily charts, that box might be, maybe one ATR, which would say, hey, the last 10 days have been so sideways and low volatility that the daily Bollinger Band means the daily Bollinger Band Z3s have compressed to within 1 ATR, and maybe I have 10, you would see 10 sideways candles inside there. When you have that abnormal squeeze, now a breakout from the Z3 takes on very interesting proportions and value, right? So you can get large moves because they were triggered by the abnormal conditions. So the question really is, how far can it move, from the Bollinger Band mean baseline to the upside? This is even easier to see when you have a super pinch, when you not only have this tight compression box, but you also have all 4 regression lines are inside that noise box. So not only is price in the Z3 lines, but your obviously your RL10 is going to be in there because it's been so sideways. So the RL10 is inside there. Imagine this was black, but I'm going to draw it as yellow. But the RL30, because you couldn't see the RL10. And then the RL90 may have come from down here and is now back up into this. So the RL90, and then maybe the RL270 finally joined. So all 4 regression lines are tightly compressed inside that box. So you have abnormal compression, unusual sideways behavior, and then all four regression lines all think that that is the fair value. Well, it's either going to, maybe it is the fair value from now and forever, and it's just going to stay like that. But the first thing that has to happen is that the RL10 has got to break out of this first, and let's say to the upside, and then slowly the RL30 will break out, and then the RL90 will break out, and then they will all drag the RL270 out there. So now, after a period when the RL10 and the RL270 were both in agreement about the fair value, you're now starting to see the traders stretching that price a certain distance. How far can they move it? Based on the amount of money that they have, which is the amount of power that they can generate on that first burst, and then can they attract momentum players? Momentum players are these other guys that RL30s, the 90s, and the 270s of the world. Can they be persuaded that that's a real move? I don't know what triggered that move. By the time we investigate it, that thing is already running. So I treat that just as a momentum breakout from an abnormally compressed condition. So now the question is, what can we do to estimate the size of the potential reward? Well, we can do the same thing that we do on the multi-time frame, multi-lens analysis. And we can look at previous, we're in this little box down here. We could just project across and say, well, it could get to these support levels. So it could go leg 1. We could measure that way. In the RLFF lens, which is one of the 5 lenses that we look at in here. I mean, we look at MACD, RLFF, support and resistance. The RLCO Bollinger Band frames as well. So if we just track the RL10, RL270 excursions, you can see that the RL10 may have been doing something like this, and the RL270 is very slow to respond. So what you do is, conceptually, you find all those places where they were in agreement. And then you measure the amount of stretch that it was able to achieve at those points of maximum excursion. And so you can measure that as a percentage of price, so that you can normalize it based on, you don't want to do just dollar stretch. When you're looking over such a long period of time, you've got to normalize that for price. Well, what you can then do is go back for the last 30 data points and then do the standard bit max, min, average, plus or minus 1. And this would give you normal stretches. So if I was in one of these and I was wondering how far could that go to the upside, I'd be interested in that because I see the kata 2 happening. Well, I could simply come down to this little structure and say the maximum reasonable stretch would be average plus 1. So I could just project that up here and say, here's the average stretch. Here's the average plus 1. And then as this thing starts moving out, I would say, all right, here's where I would expect it to start failing. Did it? No, it didn't. That's actually a plus sign. I would expect it then to start failing here. Did it? No, that's a plus sign. And now I know that in this region, I am into the abnormal gains of a really strong move. Our standard entries tend to get us into positions in this area where it often fails back. But we want to know what the boundary is to an abnormally good move. And that's where this kind of analysis will help you. And again, the tighter this range compression was, if this looks like a Z3P or a super pinch, then we have an expectation that the breakout would be big, because all these guys are surprised and they're slow to get on board because they think it's going to come back. And when it doesn't, at some point they all start, oh crap, I got to get on board and start chasing. And that's where that RL270 guy slowly starts getting dragged into the business. Like in this way I've drawn this here, these were excursions that paid the trader, but they couldn't get follow through, so it just reverted back to, you could think of that as a reversion to the mean. It's not really the mean in the sense of an average. It's a reversion to the RL270. So this little device allows you to start calibrating the size of the moves based on how strong the traders have been. And it's a nice supplemental lens to the things you would normally do when we're looking at multiple ways of estimating the previous moves. And I also just use sort of as a rule of thumb, like on this breakout, if I see sort of leg 1, leg 2, and leg 3, and I see those are all kind of symmetrical, the size of that, then that starts feeling like leg 1 of the next higher time frame, and then that could lead to leg 2 and 3. So you see some symmetry on the size of the legs projecting the size of the next move. And then it's not unusual to see symmetrical moves like this isn't during a Z3P, but after one of those nice moves up, and it doesn't continue to the upside, but instead it reaches that maximum peak and then starts to revert, where the PSAR flip would get us out. It's not unusual to see that come back to here and then give you a symmetrical size move to here. And now when this starts to revert, you start looking at that as leg 1 and leg 2, and now you have some kind of standard statistical channel on the basis of these excursions from the RL270. So there's a couple ways that you can quickly eyeball the chart just using those multiple regression lines of 10 and 270 as your primary lens for the fastest of the fast and the slowest of the slow, with the 30 and the 90 helping you see the pairs and an intermediate pair. But it's that relationship between the 10 and the 270 which really characterizes the RLFF lens, and then the use of statistics to make these estimates quickly for thousands of symbols. It's been very, very handy for me. I don't see anybody else doing it that way, but so that's also helpful. Gives us a clean, fresh view of the world, and it's a nice way to compare these other standard ways of looking at the possible moves. Okay. That's everything I wanted to cover. That has a kind of a nice look on a black background like that. I wonder how much smaller that I can make that. That's about it. Okay. All right. Take good care, guys. We shall see you tomorrow.